This is the briefing for Friday, June 27th. Well, we had a little bit of a hiccup in the stock indices today. As you can see, I guess there was some news out about the tariff talks with Canada falling through. And I think there's some issues with the bill that's at the Senate right now that Trump wants passed by the 4th of July. The market had a pretty decent sell-off. This was pretty significant, and it really suggested, and you can see volume increasing, suggested potentially that we might see the indices trade back below their very important daily key reference areas, but that didn't occur. They held, and then of course we got this really nice reversal off of that low. So a little bit of volatility today going into the close, as you can see. A little bit concerning on the longer term though, and you can see this is a daily chart of the spiders. You can see that we put in a slight new high today. I think this high over here was it was 613.23, and we closed at 614.69. So we've got two things. We've got a slight new high, and we've got a double top. Now, double tops are not double tops until you see some type of a sell-off, but we haven't seen that sell-off, and very easily this could be a breakout move, and I discussed that in last night's briefing about how we had a breakout move, a retest of the breakout, and then of course the move higher going into the close yesterday, and then of course some follow through in today's trading. Volume ticked up slightly. You can see that in the spiders. The 52-week highs minus 52-week lows improved over what it was yesterday, but this is a little concerning what's happening with market breadth. And you can see this trend that is down. Now we have a few spikes that look like they're going to eliminate that, but we have a pretty big divergence in breadth between yesterday and today as well. We were at 1700, let's call it 1800 shares positive as opposed to lower in yesterday's trading, only 275 today. And that's a little concerning, but that can always change. Now, next week is a holiday week, so volume is likely to be fairly low, especially going into the end of the week. Markets closed on Friday for the 4th of July. In the Qs, we got basically the same thing. A little bit of tick up in volume. You can see that the Qs have extended its gains and trading to new all-time highs even in today's trading. But once again, look at what's happening with market breadth in the NASDAQ. Even lower than what it was compared to what the NYSE was. About 1,700 shares positive yesterday, and in today's trading, well, it was negative 287 shares. So, and I discussed it in last night's briefing that it appears that the higher weighted stocks in the NASDAQ are carrying the averages or the indices higher. So it's going to be very interesting to see if that's sustainable. It is not sustainable, but if the other stocks are going to begin to catch up, and I'm going to get to that in a minute also in this briefing, when we look at the percentage of stocks above the 50 and 200-day moving averages. You can see the Russell really trading right at this 215 level, retested it in today's trading, but closed above it. Volume ticking up nicely, but breadth falling off, negative 1 share in the Russell for market breadth. So, and the Russell really is lagging what's happening here. Now we've got this area of rotation right through here. We've got probes above this 215 area. So it's going to be interesting. I'm going to keep an eye on watching for market divergences. So if I see a variance or a difference in what's happening between these three indices, these are 15-minute charts, that's going to kind of give me potentially an indication that we have intermarket divergences, we have potentially internal divergences, and this rally looks like it's getting a little bit tired going forward. So I'm going to be a little bit cautious going into next week, especially with the low volume week that we'll likely have as traders take off based on Friday's market being closed. Overbought and oversold, we are basically, neither. We're basically neutral. Same thing with the NASDAQ, so really no help with that as well. In terms of total volume, we had this volume spike right at the end of the day. It was really very interesting. But if you look at this volume spike, you can see we had 5 million shares or 5 billion shares traded, and look at the difference in net volume. Only 514 million of those shares were trading higher or had higher volume as opposed to lower volume. This is net volume, and the Nasdaq was actually negative in net volume for today. So it's going to be very interesting to see what happens in Monday's trading. Now, I've said it before that this market is very susceptible to news events, and certainly if there are some issues with some other tariff settlements, or if there's an issue with the bill that's at the Senate right now, then potentially we could see some type of continuation of a move back to the downside and to test the lower support areas on the daily chart. Those are really critical areas for the market to hold. Looking at the percentage of stocks above the 50 and 200-day moving average, this is what's giving me a little bit of heartburn for this rally. The percentage of stocks above the 50-day moving average is certainly well within its range. You can see this is where it was at this price level. This is where it was at this price level here. So you can see that there's really not a whole lot of divergence there on this longer term time frame. But if you look at what's happening right here, you can see that the percentage of stocks is actually declining over the last couple of weeks, the percentage of stocks above the 50-day moving average. Looking at the 200-day moving average, now look right here. This is approximately the high for the previous high that was just taken out in today's trading. Look where the percentage of stocks above the 200-day moving average is. Look where it is after today's trading when we have a new high, a new all-time high. So this is a little worrisome and giving me a little bit of heartache over whether this rally is beginning to look tired or not. Same thing's happening in the Nasdaq. You see the 50-day percentage of stocks above the 50-day moving average is doing fine, but here's where the average was at the previous high. Here's where it is at this high. So the percentage of stocks above their 200-day moving averages are not keeping up with where it was when price was at the last high. So we have this divergence, which is potentially very concerning. But right now the trend in price is up. The market wants to go higher, so we'll just have to see what's happening. The same thing is occurring with the Russell. This was the last high right here. This is where the percentage of stocks above the 200-day moving average was, and here's where it is in today's trading, although we didn't put in a new high. But it appears that the Russell is lagging both from a price development perspective and an internal component perspective as well. So looking forward into Monday's trading, these are hourly charts. You can see the buying tail that came in right here, here, and here, signaling that there was going to be some type of rotation back to the upside. Not much of a divergence in terms of the S&P 500 breadth, but you can see the trend declining in the Nasdaq, and you can see the trend declining in the Russell as well. So how those are going to be resolved on Monday is going to be very interesting. The most important thing for next week is 610 in the spiders. That level must hold. We must not trade or close back below it. 540 in the Qs, and in the Russell it's going to be potentially this 215 area, but I think it probably were more realistic to look at this 206 level in the IWM. Should be a very interesting beginning of the week. I think it's going to be a pretty slow end to the week unless there's some big news events. Have a great weekend, and I'll pick this back up on Monday for subscribers. It's been a pretty good week.